Let's talk about loan applications that sell like hotcakes vis-a-vis lenders. In other words, what are loan applications that lenders love big time? I mean, they will approve you real fast, and without even looking at your the amount that you are asking for. Okay, so here's a strategy I want you to pay attention to. If you want to have a loan application that sells like hotcakes vis-a-vis lenders, you got to really have a clear idea about the purpose of your loan. Because if you're looking for a home mortgage, or you're looking for a personal loan, or you're looking for an auto loan, or you're looking for all kinds of loans, you gotta have the purpose. The purpose is going to help you big time. The purpose is going to direct you to the specific lender that can really approve you real fast. Okay, so be careful about the purpose, and the purpose is all about flexibility in your budget. What I'm trying to say here is that if you are asking for a home mortgage, have you actually done your research in terms of mortgage lenders? If you're looking for an auto loan, have you done your research in terms of the lenders that actually can lend to your specific type of credit? I mean, if you have bad credit, or you have good credit, or you have excellent credit, or you have fair credit, you have to really see where you are at. Okay, what kind of you have to position yourself properly. So the first thing you need to understand in terms of strategy is to know the purpose of your loan. The second thing is that you have to really have a clear idea about your ability to repay. Okay, I don't care if you're asking for $100,000. I mean, SoFi or Livestream, those two lenders, they can lend you up to $100,000. As a matter of fact, Wells Fargo can also lend you a maximum loan amount of $100,000. The question is not about the loan amount that you're asking for. The question is your ability to repay the loan. And your ability has to do with your income, your cash inflow. And your cash inflow can come from your job. If you have a day job, 9 to 5, you go into work, or if you have an inheritance that pays you every month a certain amount of money, that's going to help you also qualify for the loan. Okay, so that's important. So can you pay the loan back? And also something you need to think about: you have to know the information and documents that you need to gather for your banker or credit union specialist, loan specialist, to approve you, because every loan is different. If you are applying for a mortgage, you don't have the same paperwork that if you're applying for an auto loan. You don't have the same paperwork as if you're applying for a personal loan. Okay, so be you want to be cautious in terms of the paperwork that you will need to actually gather. Okay, that's an important element to think about. When it comes to strategy for loan applications, you need to understand that your credit will affect your ability to borrow. That's for sure. But your credit is only one part of the equation. Actually, there are many variables. Okay, and your credit score is just one of those variables. So please don't focus too much on your credit score. A lot of people say, "Oh, well, I have bad credit. I have good credit, so I'll qualify for a loan, or I'll be rejected for a loan." No, your credit score, your FICO score, is only one criterion the lender is going to look at. Another criterion is your income. One other criterion is, are you collateralizing the loan or not? In other words, are you pledging some kind of collateral? This could be maybe if you have a collateralized loan like an auto loan or a mortgage, your chances of approval will go higher. Or if you choose to pledge any kind of assets, you can increase your chance big time when it comes to approval. So your credit score will affect your ability to borrow to a certain extent, but it's not going to be the big extent that everybody makes it believe. Everybody wants people to believe it. Okay, and sometimes you can also have a joint loan, so you can actually co-sign a loan application. So you don't have to go solo. You can actually go with your partner, with your spouse, with another family member, with a friend, whatever. Okay, and what you have to do here is that you want to really, this has to be systematic. I want to insist on that. You want to be actually, you want to research the loans that you are getting. Please research the loan, but most importantly, you want to go for those loans that will accept you to have pre-qualification. In other words, those loans that offer soft pulls. Okay, a lot of lenders actually offer soft pulls, so just research those. You have banks such as Wells Fargo, Bank of America having soft pulls. You also have banks such as Truist through its online division called Livestream. they give you the ability to be pre-approved for a personal loan. So you always want to go for a pre-approval. That way, you are not going to endanger your FICO score right off the bat. Because see, the whole thing is that if you are going to apply for a loan at multiple on multiple websites, multiple platforms, you do not want to lose 5 to 10 points off your credit score every time you get an inquiry, because all those lenders that you really reach out to, they will check your credit. So make sure that you only get your credit checked once. So when it comes to loan applications that sell like hotcakes, you need to understand that your credit score is actually going to be the foundational part. I've said it a little earlier. It's not the only part, but it is foundational. In other words, everything starts from there. Why? Because you want to see the kind of info that the lender is going to look at. Okay? Because maybe your credit score has quote unquote problems. Maybe your credit score has inaccuracies, has let's say things are not true, right? So maybe you have a derogatory item that shouldn't be there in the first place, or something that's actually not right. So make sure that you actually check your credit score. I mean, by checking your credit score, I'm speaking about checking your credit report. And you want to check your credit report really, really in a granular way, in a granular fashion. You want to really go detail here and see if there's anything that can really that can really make a lender pause while reviewing your loan application. You want to really fix that problem before even considering getting a loan or getting your loan application ready. Okay, that's important. That's part of the planning phase. You want to be you want to be aware of. And while going through your credit score, maybe you will realize that, hey, listen, I've paid down some credit card balances, but they were not reflected on my credit report, so I need to fix that. Or maybe you want to really reduce your credit utilization ratio. If you have to reduce your credit utilization ratio, maybe you will pay down credit card balances. Maybe bring it from 40% or 50% all the way to 30%, maybe. Okay, so this is the kind of strategy I want you to really think about this year. And you can also avoid applying for a new credit unless you need it. Maybe you will realize, hey, now it's not the time for me to apply for credit. I mean, it's one of those things where you want to be in the right position to have the right information so that when you apply for a loan, you get approved real fast. That's actually the first thing you need to pay attention to. If you want to have a loan application that sell like hotcakes, you want to make sure that you are having the right information actually right off the bat. If you want to have a loan application that sells like hotcakes, I want you to really calculate how much you need to borrow. And I think I said this to you before, but how much you need to borrow will be very quite essential for you to actually get approved. Let's say you are making $100,000. If you are applying for a $5,000 personal loan, you will get it. But if you are making $5,000 a year and you are applying for a 5,000 loan, chances are you will be denied. Why? Because there is a big delta. There's a big of a gap between your income and, in other words, your cash inflow and cash outflow. So that's important from a flexibility point of view to look at what works and what doesn't work. Okay. So understanding how much money you need can help you avoid borrowing too much or too little. Just make sure that you have the right amount, especially when you compare that amount to how much you're making. One thing I want to say here is that basically you have to look at your credit history and what loans you have actually gotten in the past, or what loans you currently have open. Because the thing is, when you estimate your cash inflow versus cash outflow, you have to see your cash outflow from a loan perspective. This is where the CUR metric really comes to play. CUR stands for credit utilization ratio, and that metric really accounts for how much cash available you have for the new loan or for other expenses. Okay, that's important. The CUR number is important to lenders because they do not want to have a borrower who stretches himself or herself too thin, because this is going to affect his or her ability to repay the loan, and they do not want to have this sort of stretching. One thing I want to say here also is that you need to also pay attention to the origination fee, because some lenders will charge an origination fee, which is really deducted from your loan disbursement. So you may need to really think about borrowing a higher amount to account for the fee. For instance, if the fee is 10%, that means that if you're approved for $10,000, you will only get 9,000. So maybe if your goal is to get 10,000, then you may need to apply for 11,000 or 11,100, so that when they remove the fee, you're still getting your $10,000 for your specific projects. If you're looking for a loan application that sells like hotcakes, I want you to think about your estimated monthly payments. In other words, for you to convince your lender that you are able to repay the loan, you got to really work through the numbers even before reaching out to the lender. That way, the lender knows that, hey, listen, here is a responsible borrower. Here is someone who has thought about the numbers before they apply. Okay. So once you know how much you need, you want to research personal loan interest rates to actually get an estimate of what you might actually qualify for based on your credit profile, but also, and that's important, but also on your cash inflow, your revenue level. Okay. So you can also go to a website such as bankrate.com to use a personal loan calculator to calculate your monthly payments and total interest charges over the life of the loan. Okay. So the cool thing is that running the numbers can help you determine whether you can afford the payments over the long run, over the estimated repayment window. They can be 3 years, they can be 5 years, they can be 7 years, they can be 10 years. Okay. Based on the amount you want to borrow. So you also have an idea of the total cost. So when I speak about total cost, just remember that the APR is not just the only cost. Okay. You have origination cost, and there are loans that have something called administrative or processing fees. So be aware of that. And the next thing you want to do, I think I've said this before, but you want to get the pre-qualified. A soft pull process is the way to go. Do not jeopardize your credit score by just applying for a loan right away. No, you want to be pre-approved first. You want to get pre-qualification first. That way you are just maintaining your chances of getting the best loan possible from the best lender possible. And the cool thing is a lot of online lenders, okay, such as SoFi, such as Lightstream, they actually allow you to have pre-qualification. So you don't have to apply right away. You can be pre-qualified. As a matter of fact, traditional banks such as Wells Fargo also allow you to pre-qualify for a loan. Okay, but not all banks allow you to pre-qualify. So just be careful. Wells Fargo does. Capital One doesn't do it, and so Discover does. So just be sure. Check first. If you are looking for a loan application that sells like hotcakes vis-a-vis lenders, just remember that a loan is not just a loan. Okay, a loan is a loan compared to another loan. So what I'm trying to say here is you want to compare and contrast personal loans, because as a borrower, you are quote unquote business for lenders, right? So when they give out loans, they're expecting revenue from you. So just make sure that you are really researching loans, but you want to compare all lenders. Now, how do you compare lenders? Well, you have to look at 6 things. There are 6 elements that can really help you in comparing and contrasting lenders. Look at the credit score requirements for the loan that you want, the loan amount that you want. Look at the repayment terms. Repayment terms, I'm speaking about the number of years you have to repay the loan, and also some ancillary conditions. Think about the fees. Think about the loan restrictions. Think about the funding time, and think about the discounts. So when I speak about credit score requirements, not all lenders disclose their minimum credit score requirement publicly, okay? However, you can get a sense of your approval odds and how your credit score might influence your loan terms by getting pre-qualified if possible. And in terms of fees, well, personal loans, I think I've said this before, they typically don't come with application fees or prepayment penalties, but some lenders charge origination fees. In some cases, the fee can be as high as 12% of the loan amount. If you have great credit, try to focus on lenders with no origination fees. Also, you might have restrictions attached to your loan. You can generally use a personal loan for nearly anything, but some lenders may spell out some restrictions. For example, you may be prohibited from paying for college expenses or buying investments. What's more, some lenders may only offer loans for specific purposes, such as debt consolidation. So, this is something to really think about. And also, the funding time can be important. Once you're approved, most lenders will fund your loan within a few days, 2 or 3 days maximum. Okay, maybe one week if you have a bank, for instance. But if you need cash urgently, you want to try to find lenders that offer next day or possibly even same day funding. And if you are consolidating debt, check to see if the lender is able to make a direct payment to your creditors. That way, you have a clear idea about what works and also what doesn't work. And also think about discounts. Some lenders offer an interest rate discount if you set up automatic payments or if you have an existing relationship with a financial institution. Okay, just keep in mind that lenders may incorporate these discounts into your quote. If you want to have a loan application that sells like hotcakes, make sure that you choose after researching the lenders, choose the lender that really will correspond to your specific industry or your specific location. Okay, and some lenders actually are easier to apply at than others. For instance, if you have a credit union will be more local or locally oriented. So if you're looking for a local lender, go for a credit union. Their process is a lot easier than, let's say, if you were to go to a national bank such as Chase, Wells Fargo, Citi, or Bank of America, or even those four. Okay, so basically, if you go with a lender, they will ask you for your identity, your contact information, your employment and income, your housing status, your loan terms. So that's important because it helps you really have a clear idea about what really work. Okay, and finally, you want to review the offer and accept the loan. So what will happen here is that if you are approved for the loan, you actually will receive an offer, and the offer will spell out all the details, all the terms and conditions that you need to abide by before actually getting the loan. Okay, just read those fine prints. Read those fine prints. Take your time. You probably need cash fast, but hey, listen, don't actually commit to something without reading the fine prints deeply. That way, you are not going to make any mistakes. By the way, if you are denied, lenders are required to inform you the reason why, and they have to send you an adverse action letter. And after reviewing the letter, you can take action to remedy any issues before applying again. So just be aware of that. In conclusion to this conversation, I spoke to you about loan applications that sell like hotcakes. I give you the strategy and the approval hacks. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.